Let's turn to our top take about a company that couldn't make it to the public markets. That, of course, is WeWork. On Monday, WeWork, or its parent company, the We company. At this point, I'd like the We
Let's
company
just call it
pretense.
WeWork.
Right, we're just going to drop that one. So they're filing a request to withdraw their IPO with the SEC. The company said it is postponing the public offering to focus on its core business. But just as it pulls its IPO, the Journal reporting that WeWork is facing a cash crunch at its current burn rate of $700 million a quarter. It's probably going to run out of money by the first half of next year. Now, Heidi, I remember talking about WeWork every day, and the whole point that I kept making,
they have to
even
go public.
though I ended up being wrong.
Exactly, he's admitting it, guys.
Well, I was obviously wrong, but the point stands. They need money, and I just don't see how the new management team is going to get the company through the next 18 months without raising some sort of capital. But if it's not the public market, I can't imagine who the next investor out there is that's going to want to put money in this thing. And WeWork doesn't need like $10 million or even $100 million. They need billions of. They were trying to raise $10 billion in debt and equity because the IPO would unlock, some sort of an amount of debt they'd already had committed. So they were looking to raise 8 figures, and now they've got zero.
Well, that was your argument, right? Well, how and what is this company going to do if it doesn't hit the public market and raise that money? I don't know what's going to happen now. I don't see SoftBank pouring any more money into this company. But that just kind of makes me question, okay, this private valuation situation, right? Yes. I think that is a problem in and of itself at this point. We're seeing these really inflated private valuations. For instance, Uber, at one point, it had a valuation of, $120 billion in the private market?
Yeah, now it's about 50.
And I just feel like, okay, we've seen Uber, Lyft, Chewy, a lot of these recent IPOs, essentially their valuations have plunged recently. So in terms of what WeWork's going to do to raise this money, I have no idea, but they are saying that they eventually are going to come to the public market. It's just not now in this year.
Yeah, I mean, I think my take on the private versus public valuation thing is, I think it's fine that private companies inflate their value and then the public market actually says, no, you were wrong.
It's actually not that.
Like, I mean, I'm sorry, like if sophisticated investors running venture capital firms and raising portfolio dollars for that kind of investment, if they're gonna like inflate the value of the things they think they're betting on and that they're trying to play this confidence game with their prospective fundraiser, like all that stuff, I mean, okay, whatever. These are accredited investors, and retail doesn't have access to this stuff, and so, I mean, I'm supposed to maybe have some moral outrage over this, but I really don't. If you want to mark up your returns and then it turns out you were actually wrong, like, yeah, it sucks. Like maybe it's going to hurt you in the future. I think this has been a really positive time for public markets because essentially, like, public market investors just did the homework.
Yeah.
Like, they just read the filing and they're like, this isn't worth this.
As soon as that S1
and now
came
it's worth
out.
that,
yeah.
right? But it's not even about the WeWork. It's about what happened with Peloton last week and what happened with Uber and Lyft and Slack. I actually think it should reinforce your faith that public markets do in fact find the correct value in general for any stock. You can always argue about whether it's undervalued or not, but I think that the public market did the homework and said this company, Uber, take the top of this list, was not worth 120, it was worth 50, and so we'll go from there.
Well, what about Beyond Meat? It's sort of an outlier, right?
Yeah, sure, like whatever. Like, I guess I've become sort of an absolutist in terms of like, the market price is what the company is worth, and I'm not going to say that I'm smart enough to know that a certain security is overvalued or undervalued, and kind of like an efficient market's maximalist, right? Because it's just easier to just say, hey, that's what the market says. But I do think that the way that the WeWork and others, the way that process was handled, I think speaks positively of public market investors.
But also just looking at the recent IPOs, I mean, you brought up this point in your newsletter not too long ago that, okay, Peloton did not have such a great first day of trading, but that's not indicative of where the stock is going to go from here in terms of, okay, well, is it going to be a Snap story or could it potentially be a Facebook story, right? Because you have to give them time to play out. But also another issue that I have with this recent IPO market and all these unicorns coming to the public market so late in the game at such a mature stage of their business, a lot of these investors who want to get in on it at IPO don't really get to play in the high growth part of the story. Like they've already been through that stage and they come to the public market so late in the game that, okay, you're starting to see deceleration in terms of revenue growth or subs added or whatever it may be.
I mean, I think there's absolutely an argument to be made that the SEC should be doing more to encourage earlier stage companies to come to the public market, and that kind of creates a dynamism within the economy that remaining private and not being subject to basically rules, the kind of disclosures you have to make as a public company. There's an argument probably to be made that makes the economy more dynamic and that is better in the aggregate, but leaving that aside, I still think the public market has done a pretty good job here in vetting
I agree with you.
these companies. And obviously, if you invested in like the B or C round of Uber, you don't care.
Yeah,
like
you're rich.
It is kind of found money. Yeah. So I think it also is like a reminder that if you're the institutional money, if you're a mutual fund going into the VC world, they did get fleeced, and you're going to get fleeced. You're the mark, right? You're the patsy at the table. So very interesting times. I'm sure there will be more to come on WeWork. I guess they're going to come public, right, eventually.
I mean, they say they are, so.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.